We have a tremendous amount of enthusiasm today for the latest episode of We Fixed Real Estate.
EAGLES, Eagles.
Eagles won. Fred was right. And he even had the spread. If you looked at the past episodes, he was off by 3 points.
Killed them. I knew it. I knew it. It's dynasty time, people.
I'm ready for a new dynasty.
There you go.
But René, as René pointed out, this could be a harbinger of doom. Every time the Eagles have won anything, we've gone into an economic downturn. That was why
I think it was an NFC. I think it was an NFC versus AFC thing or whatever. It doesn't matter.
Either way, Eagles won. Fred's happy. And if Fred's happy, we're all happy.
And there you go. Have the Dallas Cowboys left the league? Can they go to the Canadian Football League? I wonder.
I don't know. It might just be the Canadian Football League. It might just be another state.
Yeah. I mean, Los Angeles might be in Seattle might be in the Canadian Football League next year.
Los Angeles might be in Denmark. A lot of stuff happening.
Yeah. It's like I want to
Denmark.
I like take a trip to Copenhagen to see the capital, our new capital. So yeah, Denmark said, after Trump said he's going to buy Greenland, Denmark said we're going to buy California. So
anyway, this is a show about real estate.
Yeah.
About real estate. And what we're super enthused about today is origination fees.
Yeah. So here's kind of the story. There's this thing called an origination fee that dates back to, I don't know, the 14th century. So the way loans used to work is you go to Mr. Banker and Mr. Banker says, okay, well, we'll give you the loan at 4%. And you pay 1% origination fee, which basically means this was the fee that the bank was getting. These were the points they were making. And if you wanted to get a lower rate, you would pay what are called discount points. They discount the interest rate. So if you paid 2 total points, 1 origination, 1 discount, maybe you got 3 3/4 instead of 4. And yeah, those were the rates in the 1950s and early 60s. VA had an origination fee. FHA had an origination fee. They kind of all did it the same way. And then all of a sudden, when all the mortgage-backed securities happened and a bunch of other things, that stopped. So I could show you today, if you said, what's your rate for a loan? I could show you like, I don't know, 10, 15 different choices of interest rates. So it's like a seesaw. I give you a really high rate, and that's going to be with maybe a rebate from the bank or the lender or the mortgage-backed security in order for you to take that high rate. If you want a really low rate, you're going to pay fees to get that low rate. It's that simple. But what's happening in the mortgage world with mortgage loan officers and how they play this little game with people is they say, oh, your rate is, here's the situation we had. Let me give you the live situation. So we have a buyer got under contract and we quoted him a rate. I forget the rate. Let's say it's 6.5 with no points, no origination, nothing. I think there's a little bit of a rebate. And he goes and he's also working with another company who gets him 6.25 with no points. I said, yeah, hey, that's a great deal. You have to take it. Well, it comes to the fact that the originator, the loan officer, the licensed loan officer, he forgot to tell them, oh, there's an origination fee. I mean, it's complete crap. So when you hear someone quote your rate, you want to know all the points, including origination fee. You have to say those words now so they can't lie to you. Okay. The lender fees are all pretty much the same. They're somewhere between $900 to $1,500 for standard loans. Depends on the lender. Then there's tax service fee, flood search fees, those kind of things you're going to have everywhere. Credit reports, appraisals. But that's how you want to compare mortgage lenders. And that's all. That's the only thing you need to compare with them is the rate and what each rate would cost, including origination. Please say including origination, because that's where they're trying to lie to you. because down the road, it gets ready to close and you start looking at the numbers. It's like, well, wait a second, what's this one extra point? So they actually sort of can't do this because of Dodd-Frank rules, but I won't get into that. But the bottom line is the consumers, you've got to be aware. And there's less deals out there. There's less sales. There's no refis. So these originators, they're dying to get deals done. So they're going to lie, cheat, and steal any way they can, some of them. I'm sure most people do, normal things. Here's the difference between us and 98% of the companies. Our rates are online. They're live. You can go to arrivva.com/rates, put in your scenario. There's the live rate. A lot of companies don't want to do that because they want to talk to you. They want to show their value, but we're happy to talk to you. But if you just want the rate in the middle of the night, there it is.
It's not just the rates in the middle of the night. You can actually sign up and get rate notices whenever there's changes. I know I've signed up and I get a nice email every week or so.
Every week, you get it every day, sometimes 2-3 times a day.
Yeah, I picked the low frequency option.
Okay.
I don't need to rate a day, but I do like to keep abreast of it.
Got it. So yeah, the bottom line is be very careful. Get total costs, just the lender costs. Everything else is the same. Don't worry about everything. The title, insurance, escrow, it's going to be the same no matter who you go to as a lender.
I got a question because I pay a mortgage, but this is not my specialty. You mentioned the origination fee and suddenly there's an extra point. Is that extra point a full interest point on the term of the loan?
1% of the loan, 1% of the loan.
1% of the loan the first time, but they don't get an extra point into perpetuity.
No. And by the way, my customers screamed and yelled about it and they waived it. They got rid of the 1 point.
Yeah, I was going to ask that because you can't do that, right? You can't just say, oops, I forgot.
Oops, there it is. Yeah, I know. But they're trying it, every little thing. And now that the CFPB is basically gone, everybody thinks we can get away with murder. We can do whatever we want to do. The thing is, you got to be careful. Your state has a licensing board that can come after you. An attorney general in certain states will come after you. There's also a statute of limitations on this thing. So if the government changes parties in the next election and they appoint a new attorney general and re-up the CFPB and staff it and fund it, they're going to come after you eventually. So, your choice, loan officers. It's sad that I have to do these things. It's between real estate agents and title people and mortgage people that just don't get it and don't care. We ran into another title company, another escrow company in Southern California this week, but more to come on that. But they were trying to charge close to $8,000 for escrow, where our title escrow company up north charges $1,750. More to this story to come.
You mentioned that someone yelled and screamed they got the origination fee removed. If you're doing a mortgage, what's negotiable? I mean, if you sweet talk the person enough, what can be removed, what can be altered, and what's just set in stone?
You see, the law basically is you have to give what's called an LE, a loan estimate, at the beginning of the deal. And you're basically locked into those prices, but you're not locked into the rate and points, because if you're not locked in, rates and points change every day. So you could have on your LE that you're paying no points, you end up paying 6 points on a lower rate. So that's the problem. They're not locking you into the points. But, is it negotiable? Probably not, because these rates are firm. Let's put it this way. Here's the way it works and how mortgage companies get compensated. The mortgage company, who's let's say a broker, they send their loan to the XYZ company, and they say to the XYZ company, on every loan, we're going to charge 2% of the loan amount. That's all the broker can make, period, done, end of sentence. If we, by the way, charge $97.50. $47.50 for a mortgage. That's our margins. Ask the mortgage broker what his margin is. He's locked into that.
Mhm.
He can't give you back a dime. We can't change that. It is locked in by law. Nothing we can do about it.
Mm.
Whereas a mortgage banker may have some flexibility because it's their loan, but they can go lower but not higher, that kind of a thing. So but rarely do they adjust any of these fees, any of these points. They may waive a fee. They could waive their underwriting fee. I mean, we as brokers to our lender, we ask them to waive it. They won't. But, it's very rare, very rare. But just check the fees.
Interesting.
It's again, you just have to work a little harder.
Chris, what's your feeling on origination fees?
I
Go back
really
to the 1400s.
1400s. Yeah, I don't really have an opinion on them. I'm kind of new to this whole the mortgage. I've had them. I've always had them, but I never really paid attention. So now I'm paying attention.
Yeah.
Yeah, because you're in the industry.
Yeah.
People who are not in the industry.
Well, and I
don't
used to
pay
let my
attention.
ex would deal with that because he was in the industry. So I just didn't pay attention, but not anymore.
It's easy not to. I mean,
Yeah.
Unless you're Fred, it's not all that interesting.
It's not, I was just gonna say, it's not all that
Right.
interesting.
Because all you think about is what's my monthly payment going to be?
Yeah, exactly.
That's it. Same with the car. You go in, the car dealers love to ask you, hey, what do you want your monthly payment to be? And then boom, they got you. They're just going to manipulate the numbers.
Yes, the monthly payment is important, but also people do care about their mortgage rate, right? So I think it all boils down to it can be whatever origination fee that there is, as long as the rate and the long-term picture makes sense, right? Because you can have the lowest origination fees in the world, but if you have a 11% interest rate, then
sure.
you
You got to
so
look at it.
and I think moving from the origination points to the actual mortgage rate, we still have a lot of buyers who they are. So one of the tools that mortgage brokers have in order to be sneaky and capture leads is
I know what he's going to say if we lose.
But they have such a low interest rate where they quote you like a 5.1 interest rate, right? So then let's say that we run your credit and we give you a pre-approval. What we do is we give you a really high rate on the initial documentation that shows 8%, for example. That way we don't have to go back and pre-approve you again if for whatever reason the interest rate is higher than what we originally anticipated, right? But it doesn't mean that we're locking you into 8%. But because then the other mortgage broker sends in a documentation saying that it could be 5%, the client is like, "Oh, wow, I want to work with my broker because they gave me good rates." Well, you can't lock any of that rate until you're actually under contract. So it's good to have multiple pre-approvals, but the idea of shopping the rate, that has to wait until the day that you have the signed residential purchase agreement. Anything else?
Because you have to check rates absolutely on the same day. Sometimes you have to do it within a certain period of time because rates can move during the day. It's like a stock price. They move and there's nothing we can do to control it. The other thing the loan officers will do is they'll say, hey, I'll give you a mortgage pre-approval for exactly what you're going to bid on a house. This is the absolute wrong thing to do. The reason they do that is because they want you to keep coming back to them so you remember them and that, you make a relationship with them or they make a relationship with you or try to. But the idea is when you're bidding on a house, you want to show the seller, here's the biggest reason why you do not want to do a approval for just the sale price that you're offering. Even if you're one bid, multiple bid, doesn't matter. You want to show number one to the seller, hey, don't worry about me. I'm approved. I'm fine. I mean, obviously we want them to get fully underwritten, but look how qualified I am. You don't have anything to worry about. The seller doesn't say, oh, they have a higher approval. Let's try a higher price. Well, you just say no to the higher price. But here's the big one. And here's where we've seen this happen. And we've told people, and they lost houses because of it. Just to make up an idea, you bid $1 million on a property and 2 other people do it. Seller comes back and say, okay, we got 3 people, making reasonable offers. Now we're going to have a second round to go higher, let them bid against each other, which is normal. And then they look at your paperwork and say, oh, you're only approved to $1 million. We won't include you in the second round of offers because you can't qualify for it. So your loan officer has screwed you out of a house. And we have seen this happen. So again, get the highest pre-approval you could possibly get and have a good agent, and you be able to negotiate, not based on the fact that you think the seller is going to ask more because you're approved for more. That's silly. That's in the old days when you were the only one bidding and you wanted to play hardball. Yeah. It's dumb and it doesn't exist anymore. So that's that.
That is that. Now, I have no segue to this because I have no idea what this is, but well, I do know what it is. What's an HR department employee, and how is that relevant to buying and selling houses?
Okay. So here's what happens. You go through the whole mortgage process, the inspections, you get your house done, and you're about a week out from closing. What the lender has to do is contact your employer to make sure you still work there. Reasonable. Okay. Well, we have a couple of Google employees and there seems to be a whole mess of a problem now with verifying things with HR. You can't just call somebody. You can't even go on these websites that are dedicated to this stuff because they're disconnected. So HR at Google now has some kind of an AI thing, and it's just impossible. So I'm sure it'll get straightened out, but here's the point. Before you apply for a mortgage, find out what the process is to get your HR department to verify your employment with the mortgage company that's going to be called. Test it. Make sure it works. Because you don't want to be sitting there, twiddling your thumbs because your HR department can't acknowledge that you actually work there, even with a pay stub. They do a verbal verification of employment. Or sometimes it's in writing, sometimes it's computer system, but they got to verify it. So realize that's coming and prepare for it.
That is an excellent tip. You'd hate to get right to the end and then get screwed because your HR department is not doing what needs to be done.
Yeah, I'm like, whoops.
I could see that would create a lot of antsiness.
At a minimum. At a minimum, for sure. What else we got, Drew?
You're supposed to talk about antsiness.
Yeah.
The next.
Yeah.
Drew,
That was a perfect setup.
Fred didn't catch it.
yeah, I didn't. I completely forgot.
I was so sorry you missed it.
That was a good catch, Drew. Antsiness. We get this with every time we write the first agreement for someone. Deadline is 1:00 on Tuesday. We submit all the documents. We put everything together. We submit it. By, what would you say, René? Like 3:00, they start bothering us. Did you hear anything? Did you hear anything? Did you hear anything? Did you hear anything? Did you hear anything?
It's pretty immediate.
Yeah. So it's like, what you have to understand is we send in an agreement. There's maybe X number of other bids. They all send it in. There's not a specific deadline. Yes, in the contract, there's deadlines, but that's a whole different story. It does, and in California, they ignore them. It doesn't matter. So what happens is we don't know what happens. First of all, what could happen is the agent looks at all the offers and sees what everybody's offering. And then she has one of her best friends making offers for their buyers. And she calls them back and says, hey, give me a new agreement for 10,000 more than this, and you'll get the place. We don't know that happens or doesn't happen. There is nothing that's the listing agent has to do. Nothing. They could be taking some of the contracts that have names that they don't like. And then when are they meeting with the seller? We don't know. Maybe there's two sellers. She meets with one at one point and another with another. We don't know. So the bottom is, relax. We'll let you know as soon as we know something. We verify that the people got the contract. That's important. But then it goes in a black hole and it disappears. And we just wait and wait and wait. And every first time writer of a contract is antsy. Oh, what happened? What happened? What happened? So all we can tell you is chill. We'll let you know when we know. So there's my antsy statement.
So ways to combat that antsiness, like set the expectations. Like we'll give you a status update at 5 o'clock today, and maybe just
But we're not gonna say that we'll do that if we don't know we're going to get an answer. Ours is when we know, you'll know. Everybody said, "Did you hear from this one yet? Did you get the forms yet?" That's because people think that people are ignoring them. We're right on everything. As soon as we get something, we put it into the Slack channel. We'll let you know when we hear. If you don't hear from us, there's nothing to tell you.
No,
I think people are just so excited. They're so excited, and it's hard. It's hard. I get that. I mean, I've been in that position, so I kind of don't blame them for not. I mean, I get it.
Oh
but
yeah. 100%.
So emotionally involved. And really want that house. They've already moved in.
Yeah, and then they lose it by $300,000.
Yes.
Usually that first bid, that's when they start to understand the market, and they either stay in or get out, because people just don't get it. When we first talk to them, we tell them about these crazy things. They don't think it's real. Oh, I like this house. I'm going to bid on this, and and blah, blah. Well, you're competing against people who've been in the market for months, years, even paying cash. Don't care about certain things. The first time you see a property, you get this going, oh, well, this is a problem where the landscaping, blah, blah, blah. It's like, no, you don't understand. Nobody cares about that, because what you're doing in California is you're buying land. You're buying just an address, a location. It just happens to have real estate on it. That's part of the problem. So, but anyway, now I just want to let everyone know that I've changed watermelon brands.
Oh, Evolution. I didn't know they still had that brand.
Oh yeah. Evolution, the mighty watermelon, 336 milligrams of electrolytes. 32-ounce bottles, which is really nice.
Where do you buy that?
Well, I've been buying, everyone's got it. Sprouts has it. Bristol Farms has it. Ralph's. So it's pretty readily available. There's not a lot of them. So I go in and I buy like whatever they got in the refrigeration section. I buy 8 of them and they're gone. So they think, oh, this must be a hot product. And I go to 2 or 3 stores and bought them all up. I clean them out. Yeah. So Evolution Fresh, awesome stuff.
Maybe one day they'll send you a sponsorship.
Exactly. Drew, you gotta get this out today.
You're on your 3rd watermelon brand.
I think, yeah. Started with those cans with the Vietnamese
cocoa water,
watermelon, cocoa water. This is so much better. It is just literally watermelon and lemon juice. That's it.
Renee, I know this is your favorite topic. What do you think about Fred's watermelon?
Instead of talking about watermelon, I'm correcting a purchase contract. So no comment there on just spending money on all these expensive drinks. Just drink regular water. You'll be fine.
Tap water for you. I have water too. Have the electrolytes, and it's very tasty. My dessert.
Well, that message was sponsored by Watermelon Water. Let's move on to Repair Pricer. Nothing can be more exciting than that.
Okay, so when you do an inspection, the point of the inspection is obviously to find out what's wrong, but you want to go back to a seller and try to renegotiate in one way, shape, or form, or it's kind of deal where they don't care and you take it as is. But you need to negotiate back with one of 2 things. And number one is ask them to fix certain things, which most sellers don't have the capacity to do or the time to do it before closing, or get a credit. Now, Repair Pricer does a cool thing. We upload the report, the inspection report to them, and they take each inspection item and price it out based on where the property is. So if it's in Northern California, they're going to use Northern California rates for guys who work there. And I don't know if it's union costs or whatever, but a fair wage for there. And they break it down. So it's like, okay, we want credit of $500 and it's for this particular, and here's our report showing that it's $500. This is evidence you can show to a seller and a listing agent that it's a good idea as to what it's going to cost.
Mm-hmm.
The second idea to compare with Repair Pricer is put it in an AI agent. You know, you are the greatest genius in the history of the world in pricing repairs in a residential home, in the blah, 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 whatever. You know, give it a good prompt telling it what you really want. We're negotiating with the seller and throw that in there. It'll give you costs now. That's running in ChatGPT, and it has done it. And comparing to Repair Pricer, it's some are right, pretty much right on. Some are way off, but I don't know why I haven't dug into it. But Repair Pricer is the easiest way to get it. I think they charge $75 and take like 3 or 4 hours. But worst case, you want to go with the AI version, and maybe that gets you what you need. But you got to use dollars to ask for credit, and you got to have proof. That's really the bottom line.
Repair Pricer would give you a little more proof than going back to the seller saying, I put it in Chat GPT and they said you should give me $2,000.
Yeah, and especially if sellers are in their 80s and don't use computers, they have no idea what it is. But, you know, depends on the agent too.
Mm-hmm.
So, but secondarily, we use a company called Inspectify that we refer people to get inspections done. They're an aggregator of inspectors. They're not an inspector, and they're all over the country. So they find home inspectors, sewer, roof, termite, whatever. What they do is they do the same thing for us as part of their fee. They put it in their AI that they've had as to what the repairs are going to cost. So Repair Pricer, I'm sure, has a different AI than Inspectify, and the regular AIs are different. I mean, start building your own LLM if you're that crazy. But the bottom line is you want to show the seller, hey, this is what it's going to cost. This is the proof. I mean, go out and try to get bids, but sometimes that's impossible timing wise because you have a short number of days to just get it. And repair guys they're busy or unreliable, and they're just hard to get estimates for. There is a company that I remember, and don't quote me on it because I can't remember the website, but it's a roof inspection company that does something with live satellites or something that can tell you what the roof is going to cost to repair.
Oh, yeah.
Yeah, there's all kinds of wacky things like that, but it's just going to get deeper and deeper into this, and this is going to be the future. And all the inspectors are going to have this built into their software eventually. So
that satellite stuff's freaky. My mother-in-law, who I bring up on the show all the time, they weren't going to renew her home insurance because they took a satellite image of her roof and saw that she had some stuff on her roof that would have been a fire hazard. And they were just some old panels that the roofer left up there. But they called her out on it, and they wanted to make sure that those were removed.
Okay, well, it's good news, bad news, but yeah, it's cool.
Granted, they were clay panels and would not have caused a fire hazard, and they just moved it from the front of the roof to the middle of the roof. Because aesthetically, it didn't look good, but they still had to remove them.
There you go. So Big Brother is definitely.
Oh yeah,
yeah. So technology is good and bad.
So we're recording this on Valentine's Day, February 14th. They got
the day of the Eagles parade.
Oh,
today's today?
Today.
They haven't had it yet?
Oh, no, because there's crappy weather during the week. So
okay.
So you can imagine all these drunks all day drinking and then trying to go out with their significant others to restaurants on Valentine's Day evening. They're going to be half asleep. They're going to be sloshed. Oh, it's just going to be a mess all night. So,
Are they going to tear it up again? I mean, they did some. Pretty
yeah, that was at night. They had been drinking. The parade's kind of over. It's like, I think, at the art museum now where the Rocky statue is, and they go through the speakers, and then who knows? They all disperse wherever.
Well,
It's just a mess.
you'll be there in spirit.
That's it. Not my thing to go to these things live. I love television. I love it.
Let's see. Any last thoughts, Chris?
No, not today.
Not today. It's snowing up in Seattle, or now it's just yucky.
Yeah.
It's actually raining here in California, which is good.
Do you have rain today? We're finally clear. It rained yesterday. It was ugly.
Yeah, it's weird. We're only like 80 miles from each other, but yeah, it was raining this morning here.
Yeah, there's more storms coming in. We're all going to die. So,
On that bright note, this has been another episode of We Fix Real Estate.
exactly, we're all going to die.
Yeah, see you guys next week.